Well, it is absolutely my pleasure as Towerpoint Wealth's president and founder to have an opportunity to speak with and have a conversation with, which unquestionably is a pioneer in the land of ESG investing, an area that Towerpoint Wealth has unquestionably pivoted to and began focusing on with regards to helping our clients both build and protect their wealth and doing so in a very sustainable fashion. So with all that being said, it's a pleasure to introduce the founder and president of Ethic Investments, my friend and colleague, Jay Lipman. Jay, thank you for joining us this morning.
Joe, it's an absolute pleasure to be here.
Good. So I know you're down in Los Angeles and doing some work with Ethic, and I'm curious not only how the weather is down there, but what's the temperature of the ESG and sustainable investing world as well?
Well, I think that, it's a fantastic question, very timely, just because what we're seeing, this year, 2021, as well as 2020, and honestly, the last number of years, is we've seen ESG explode, right? We've seen this level of demand from investors recognizing that they get to align their portfolios with what they believe, with what they see in the news, with their values, has just led to a huge surge in demand for this kind of investing. And it's very exciting.
Yeah, I know with us at TowerPoint, I mean, we grew up with a major Wall Street firm before breaking away about 3.5 years ago. And I'm sure you've seen it at Ethic as well as we have here at TowerPoint, just simply raising awareness that this is in fact doable and implementable within the context of aligning one's portfolio with their personal values. Not only is exciting, but just helping people understand that this is something you are able to do, won't have a detrimental effect on returns. If anything, it could be accretive to your returns, is something that we've worked hard to overcome. And with our partnership and your help, so far, it's been absolutely fantastic. But no doubt, definitely no longer a trend or a little niche idea. It's definitely a full-blown movement right now.
It's one of the things that technology has actually allowed us to do, right? Is to get more investors into this type of investing by helping them to connect with their values and understand the kind of impact their portfolios can have. But a question for you, Joe, what has actually led TowerPoint to making ESG such a focus in its practice since its inception?
I think obviously a good question, kind of a twofold answer. I think number one, just outright demand, Jay, from the standpoint of our clients. Once we've built out the platform, obviously in conjunction with Ethic, to really provide a product that's unique and customizable based on what a client's values really are, to help them understand they can align their portfolio with those values. I don't want to say we've had people beating our door down, but every single time we introduce this concept and idea, it's been met with complete open arms, and people are excited to get going. So I think that certainly is the first part. I think secondly is just really just from a firm philosophy, and I'll be assumptive and thinking that probably you all at Ethic feel the same way. But philosophically, if we want to try to improve ourselves, individually and obviously in a societal fashion, then there's no better way, at least the power that we have as a firm in helping and counseling our clients, than putting our money where our mouth is. And it may sound a bit cliched, but frankly, I don't care if it sounds cliched because it's true. And to have that be kind of a core principle here at TowerPoint makes it not only a very easy story to tell, but I think makes it a very attractive idea. Again, once we educate clients about the opportunity to put together a sustainable portfolio, and I know that's something that Ethic certainly has helped us focus on.
Absolutely. I mean, how have you seen it actually develop in the last year alone? Like, what have been the catalysts and what have been the client conversations that you've been seeing most frequently?
Yeah, well, I mean, obviously, with how chaotic the last couple of years have been from a political standpoint, and obviously we all have concerns from a divisiveness and the dichotomy that we're seeing between red and blue. But I think putting aside the political side of things, just people having a much higher degree of interest, not only in kind of putting forth what their values are, but putting some impact from an economic standpoint behind it. I know with myself, when I was at a former major Wall Street firm, we had a couple mutual funds available to us. We had a couple different ETFs that we could call ESG friendly or sustainable. But
Mm.
the evolution that we've seen as a firm here over the past couple of years, I think in conjunction, obviously, then with what's happened with the pandemic, has really led clients to A, have some more time to reevaluate what they like out of their capital and out of their portfolio, and B, I think have a higher expectation that they're really putting their money where their mouth is and where their values are. And even a few years ago, I don't think people really, I don't want to say cared as much, but didn't realize that they had that ability. And now the learning curve has been a steep one in a very good way, I would say.
It's actually, I mean, it's a fascinating point looking at the last year alone, right? What the catalysts have been in the news that have driven people to want to have this conversation. We've seen specifically that, the focus on the pandemic, public health, worker protections, the impacts that's had on all of us, as well as the protests, the racial justice movement, people recognizing the impact that these issues have and the connectivity they have to corporate activity, right, and to our portfolios. Have you seen that as well?
Yeah, and I appreciate that because I mean it does paint a picture of, I would say, a much broader sense, of what ESG investing means. I mean, just a couple of years ago, it wasn't even called ESG investing; it was simply called socially responsible. And I think a lot of our clients have had a hard time kind of understanding how that evolution has occurred. To your point, Jay, over the past 12 months since the pandemic, for better or for worse, kicked into high gear in March and April, and obviously the associated protests and issues with George Floyd and racial equality. It's helped people to understand that aligning a portfolio or your portfolio with your values doesn't necessarily just mean uh, getting rid of alcohol, tobacco, and firearms.
Yeah.
Not that that's a bad thing. It certainly is kind of the genesis and the foundation of where ESG comes from. But there's a much broader basis for how to develop and cultivate an ESG friendly portfolio that at the same time, and I think this is the best part, aligns with, what's important to Mr. and Mrs. Jones or Mr. and Mrs. Smith. And, ESG is a very subjective topic. And I think the beauty, again, of our relationship with Ethic, not to make this into a commercial, is we're able to help them customize things based on, their values, which certainly is different depending on who you're talking to, needless to say.
Well, I think it's, one of the most fascinating things is, especially as you look at the Towerpoint strategy, right? As you prioritize things like climate change, women's rights, the interconnectivity between many of the pillars that you have and what we're seeing in the news. Right? The fact that, COVID-19 had disproportionate effect on women because the majority of essential workers were women, right? They were on the front lines. They were delivery workers, social workers, medical workers, right? The interconnectivity between everything that we're seeing in the news and what we care about, what you care about with the Towerpoint strategy has been one of those things that has really connected with people because we realize that what we care about in our portfolio does actually connect with the real world, and that corporate activity is vital to having the kind of impact that we want to have.
Yeah, I mean, again, you hit the nail on the head as far as the ability to really become much more specialized, not only in what you own, but in how you position your portfolio to reflect those different issues that you just discussed. And again, I think one thing that we've worked hard to help clients understand too, Jay, when you own an ETF that is ESG, or you own a regular open-end mutual fund that is socially responsible or ESG, you're really captive to whatever the mandate of that particular fund and or that particular manager may be putting forth as far as what they feel is ESG. And that, again, that's all fine and dandy, but what they believe is important to include as far as the stocks or companies that should belong in the
Mm.
portfolio, or conversely, but just as importantly, what companies to exclude may or may not fit with what a client believes is appropriate for their values. And so we're fortunate to be able to work with Ethic to really be able to have a client help a client to customize a portfolio based on the Towerpoint Wealth sustainability pillars, which you just mentioned. And needless to say, between the pandemic and now obviously the election in 2020 and the new Biden administration, I'm curious what your thoughts are with regards to obviously the huge pivot that we've seen since the inauguration.
Well, I mean, it's a fascinating conversation. It's a fascinating question because you're going to see an entirely new shift of essentially the role and responsibility of companies, but also the regulations that have been really missing for the last four
Already
years,
are.
right? Exactly. Well, the last 4 years, we saw an unprecedented level of deregulation around many different industries, whether that's energy, fossil fuel related industries, as well as companies that are more connected to things like racial justice, whether it's private prisons, predatory lending. And what you're going to see is that dearth of regulation, that deregulation, is going to completely reverse. We're going to see a lot more regulation return to corporate activity. And that is going to mean that companies and portfolios that are insulated from the risk of that regulation, more responsibly run companies, companies that think about the long term, that are not
Right.
as impacted by that regulatory environment, portfolios that are built for the long term, thinking about things like sustainability and responsibility for the long term, are going to be much more insulated from that kind of risk. And that is really putting ESG in a great position to thrive in the next at least 4 years.
Yeah, I mean, I would, my goodness, I mean, I would argue with that point and say, I think it's open ended. And regardless of what happened in 2024, I mean, we just got through this election cycle. You know, I'm looking forward to another 4 years. But again, to the point we made earlier, I don't think it's a trend. I mean, it is a full blown movement. And
Yep.
when I use that phrase, part of what I mean, and I think part of your point, if I'm hearing you correctly, is that there was a perception that, hey, if I align my portfolio to be sustainable or
Mhm.
socially responsible, or now ESG, what kind of give up am I going to have to tolerate from the standpoint of growth or returns? To your point, now with the way the administration is focusing more on these regulations, quite frankly, the way investor demand is starting to focus a lot more on companies that are doing the right things. We feel at Towerpoint, and I know that the Ethic has a empirical data, and there's a lot of empirical data to support the fact that it may not be a give up of returns. It very well could be accretive to returns as demand for these type of companies that are doing the right thing increases, be it through regulation or be it through, hey, this is just what investors want now, and that's I think we're still just scratching the surface.
You touched on a really interesting and important point here, which is that ESG, called by another name, is just a way of investing with more information, more data, right? Versus looking at an index, which is just indiscriminately choosing 500 or 1,000 companies based on certain basic financial parameters. ESG is saying there's a lot of other data, there's a lot of other information about how that company is run, right? The quality of its leadership, whether it has certain climate risks, whether it's more subject to getting sued for certain infractions. And we're
Sure.
saying, well, we're going to use that information to make our portfolio as opposed to ignoring that information, which is what you're doing so well at Towerpoint, is utilizing and honestly partnering with us to put that data into practice to build the Towerpoint strategy.
I was going to say with your help, certainly, but I mean, to your point about the data and the analytics, even 5 years ago, that type and depth of ESG specific data was not nearly as available as it is today. And again, not to make it a huge commercial, but we feel very fortunate that we're able to tailor a portfolio specific to what a client's values are and leverage not only just our partnership with Ethic, but obviously the resources and the data sets that you're using in order to filter and make intelligent decisions about, again, what companies to include, what companies to exclude, depending on what's important to each of our clients on an individual basis. And that it's huge competitive advantage.
Absolutely.
Well, good. This has been wonderful. I know we wanted to try to be efficient in our conversation here, and hopefully this will be of use to those who perhaps have heard about ESG or socially responsible investing, and want to understand a little bit more, not only about what exactly it means or how they can potentially apply that to their portfolio, but our goal at Towerpoint, obviously is an education first type of approach, and it doesn't take too long to I think have a client buy in to having their portfolio align with their values. And once we talk with them about their ability truly to customize with ethics help exactly how they can do that within their investments, it tends to work out very well. I almost said slam dunk and home run, but I've already said too many cliches today, so I'll just leave it as a very nice harmony between sustainability and economics.
Love chatting sustainability with you. We could definitely talk for another 2 or 3 hours about it. But no, we're looking forward to a good year of sustainable investing together.
Cheers, Jay. Here's the ESG, and here's to you guys at Ethic, and we appreciate your time. Thank you very much.
Cheers, Joe.